Good evening, good afternoon, everyone. Seems like there's only one person here. That's great. Sue, if you can hear me, can you raise your hand? So I know that the voice is recording and everyone can hear me. Thank you very much. All right, so let's begin. So we'll begin in about 4 minutes. And what you can see here is the radar. This radar is used exclusively for looking for the ideal trade setup. And if you follow the onboarding process, I always kind of encourage people to always follow a time frame that works the best for them. In the Discord community here, I always encourage to use the daily 78-minute time frame and the 30-minute time frame with the after hours turned on. Okay. The algorithms that you see here running on the other servers, they are trading on with the after hours turned off. And then when you work between the on and off extended hours period, you need to kind of understand that the algorithmic trades that are taken in the 750R, they're working on the extended hours off. Whereas option traders, we need to use them on to understand, to interpret the chart patterns with a little bit more data, considering the pre and post market activity. This is very important. And this radar here, as you can see, has different time frames that we monitor. So on the far left-hand side, we have the A7, that's the weekly. There's a lot of A7 weeklies that are scanning on A7 here. That means there's a huge move coming in the market. And then we have in the big portion of the radar, we have the A6 that's covering the futures plus a couple of the stocks that I follow. But mainly I follow the stocks that are covered in the 750R. We have a couple of A6s here: AVGO, CRM, Crowd, Fedex, Goldman Sachs, Netflix, TDoc. No, not TDoc, Tesla, Twilio, and Alta that is scanning on A6, along with some complementary 78-minute TTM squeezes. Today's in the focus session, we're going to just discuss about the current trades that we're in, and then talk about what happened last week and why we staggered into Roku. And I also want to talk about how people should have been managing. I think I've talked about a couple of people in this room that almost made $100,000 on Roku options, but they didn't follow their management plan. This is very, very important because, as you know, the things that we're doing here that I've created in this room is designed so that we can help everyone improve on their specific net liquid. Net liquid is almost one of the biggest problems we have in most of the trading rooms. All trading services will always have one thing in common in terms of what they can do to optimize. And the biggest common denominator, which is the biggest problem we have, is the net liquid. People can't take, okay, here's the futures. Futures open. Nice. Nice. Looks like we're going higher. Okay, we'll talk about this open. This open is pretty good for now. And it looks like we're going to be moving higher tomorrow. But we do need to plan, talk about what we did last week and some of the most important things about risk management. Okay, I'll always do my best to provide the research that's going to help you make the most amount of money. But the thing that I can't do and I can't tell is what your net liquid is, unless you explicitly tell me. But I can't do that when there's like 100 people, right? So you have to take some sort of responsibility when you click that button, because essentially what everyone is doing here is just clicking a button at a specific strike price, meaning you're putting risk on. And then because you are taking risk, then your job is to manage that risk in a methodical way that we prescribe. But as your performance increases or improves, you're going to be generating profit. And if you generate profit, then you need to know how to manage that profit with respect to the setup, okay? And the setup and the strategy. The strategies are usually the ones where you can determine and calculate position size based on your net liquid. This is the most important part, and Kelly Criterion is what will be having a course on that for tomorrow. That's onboarding day 3. We already went through onboarding day 2. If you go through the video on onboarding day 2, you'll see that all the setups that made the big moves on Friday, mRNA, Roku, and a couple other ones, followed the same setup. And we also talked about Shopify. It all followed the same setup in the ideal trade setup. Okay, so that is the most important. I think if you really think that I'm providing any value, then you should really take the heart into the 2 most important things that you are going to take away from being here with me. Is the ideal trade setup is used to filter out the high quality trades, right? You got the, I don't know if anyone remembered me going to these this supermarket buying some ungraded beef, ungraded steak, the ribeye ungraded steak versus AAA Angus or Wagyu. You know, they have different qualities of steak, and I tried the ungraded. I marinated it for a couple of hours, and it still tasted like crap. Okay, you need to find the good quality stuff in order for you to take that risk. And if you take enough of that risk and the quality is always the same, then what's going to happen is you're going to notice a big improvement in terms of the taste, in terms of the whole enjoyment of that nice cut that you're getting from at that supermarket. So you want to make sure that you are following that, using that ideal trade setup as your filter. And then remember that the difference between a strategy and a setup is that you can't really determine the position sizing on a setup. Okay. How do you calculate something like, I mean, when you're taking a setup that has, you know, a little bit over than, you know, 51 to 55% probability of success, things are all lining up on the time frames with 78-minute, 30-minute complementing each other with a yellow D, purple D. Maybe you got a BLT there with the ET. I don't know how you're going to really determine, like, I don't think anything should be over the position size of a strategy. But if you do something that has, if you take a setup and your position sizing as if it was a strategy, like our Roku TGIT, then you know you're going to get yourself in a bit of trouble because you're taking too much risk and too many different types of setups. Think about how many different types of setups there are at one given time in the market, and you obviously can't take them all, right? It's kind of like your marriage. If you're married or you got a girlfriend, you can't keep on marrying every single person in the world, right? It's nonsense. So you have to be selectively choose the right setup and manage that. Okay, horrible example with the marriage thing anyways. Okay, so let's go to the focus session, PPT. So we have the futures opening up in the above the 6-day moving average, which is good. We're kind of extended, making new 52-week highs. Focus sessions, as you may know, we run these things twice a week. We have, it's on Sunday and Wednesdays at 6 p.m. just to kind of make things clear, right? Because sometimes we get a little too itchy and the itchiness is kind of unbearable. But we want to just kind of realign our plan going into the week. I think there's a Fed speaking this week, so we do need to be careful of that, but we'll double check the schedule to see if there's a Fed speaking, because Feds, you know, they're always there to mess things up. And the purpose of this the focus session is just to reinforce a trading plan, just to make sure that we're on the right side. We do have a couple of big events coming up this week. We got the Tesla earnings, got the Fed, got a lot of things. But all I'm thinking in terms of my trading plan is just thinking about one thing. That's TGIT, Roku, okay? Roku ends TGIT not tomorrow, on Tuesday at 10:30 a.m. Eastern time. Obviously, this is the move in Roku, the 12% move on Unreal. And we'll talk about that later on today. So this is contents for the July 25th. So as you know, all the stuff that I'm making right now is fresh. This is a fresh new focus session. I don't like to prepare everything in the beginning. I like to just kind of have update everything on the fly. So just kind of go through the thought process, and then whatever thought process that you may not be in agreement with, you can just change it up to you, whatever you like. But at least you can get to see everything live here in terms of how I'm preparing for the trading week. Okay, we're going to review the TGIT, TGIF ledger and understanding the strategy in efficiencies and metrics of it, and then review the profits, because we're going to talk about the compounding profits potential that we're looking at potentially in Roku and Tesla. We're going to be defining our trades from that we're going to be looking to manage into July 26th up to July, obviously, to Wednesday, which is going to be July 28th. Okay, and then we have another focus session on July 28th, 6 o'clock p.m. Eastern time. And then at the end of the session, we'll review some charts. So if you do have any charts that tickers that you want us to look at, just type it into the main chat room, and I'll be keeping an eye on the message board. So if you want something to, okay, so Andrew posted, so the calendar. Okay, great. Thank you very much, Jay. Jay Powell speaks on Wednesday. Awesome. So that's great. You know, Andrew there posting that link for me. That's a community. Communities are here to design, are here that are designed to provide high quality information and content, and provide support and just keeping the information constantly flowing. That's what you want a community to do. Now, there's other communities that you can join, trading rooms that'll just give you trade alerts, and then you can make some pretty big money if you take some big risks, which are fine. Like, there's nothing wrong with that. In the end, it's all about being consistent and making sure that you are focused on what your next trading plan is going to be, because it's all about managing risk in this uncertain environment. Okay, so this is the ledger from the previous week. I'm drinking a Red Bull here because I got a lot of work to do later on tonight. Nice Red Bull, 473 mil, calorie free. I got a lot of work to do, but yeah, let's just talk about this ledger here. So this is the campaign number 2. TGIT is the bread and butter of everything we do here. As you can see in the spreadsheet here for June, we started this campaign back here in April 23rd, and then it went through a drawdown, and then it finally started to pick up, and we got a nice runner on those Rokus. So you can see out of all the trades here that you can zoom in here, out of all the trades here, they've all been Roku. And we did make some pretty good money on Tesla one time, but gave some of that back. But most of, you can just tell if I just trading less means more. And if you can check out the P&L, it's up more than, I would say, almost over 100%. And this is what we're going to talk about on that trade that we did last week, where what I did was, because of the number of new people joining, I wanted to reset the ledger such that it's starting from 0. Okay, which means that the whatever profit you had from the previous campaign, that's your potential profit that you can use on the next trade. I cannot determine that for you, as I am building, holding the hands of the new members who are coming in. I have lots of people coming in. I talk with everybody. If you want to talk with me and ask questions one-on-one, I'm more than happy to even call you whenever you're free, or even today with this focus session, all paying members, part of this community, can have a dialogue with me. You just raise your hand. I'll unmute you at any time. I'm a very nice person. I don't yell. Okay, I'm a very reasonable, nice person. Based on my previous the jobs that I worked as an engineer, I worked with a lot of assholes. A lot of them. They're just so amazing how many different types of assholes there are. And when you work with that many people who have just the weirdest and most not agreeable personality, you build a tolerance. I'm a pretty nice person, so feel free to raise your hand and ask questions. Don't feel like you are going to be singled out as asking the worst question, because honestly, there's no bad question unless you don't know your name. I think the worst question you can ever ask yourself I remembered there's this one person who I was working with. He said that if you can't remember your password, he doesn't want to be your friend. And that's a pretty strong statement because, passwords are very, they should be designed to be very personal. If you can't remember your own self, then yeah, that he did raise a point. And sometimes you can forget your passwords, but usually if you are really like on point, you should not, in theory, forget your password. But yeah, and most questions are legit. So feel free to ask any questions. Raise your hand and open up a dialogue with me. This is the current ledger as of July 9th, 2021. And basically what I did here is we were drawing down. Okay, we were just trying to get into that TGIT early, and Roku was giving us a bit of a problem along with Tesla. But we position size, and as you can see here with the position sizing, we not with not that much risk. Okay, we are able to now come out with a little bit profit. So I don't know if anyone really is anyone like close to this ledger, or in terms of percentage, you should be up in your net liquid about, if you structured your TGIT campaign correctly, you should be up about 25%. Anyone near 25% in their net liquid? Anyone? No. Anybody make a winning trade on Roku last week? Anybody up positive, at least on just trading Roku? A couple people. Chet? Well, I talked to you, Chet. You made quite a bit. Yeah. And so, yeah. So in theory, if you've just followed these two spreadsheets, like this one here and this one right here, you can see that we've only traded how many tickers? Roku, Apple, TDoc, Tesla. That's it. We've only traded 4 tickers. And you should, if you start off with a $10,000 account from April 23rd and lost some money here and there, you should be up at $21,000, $23,000. And so since April 22nd to April, so it's May, June, July, August. So about 2 months. In 2 months' time, you should have doubled an account, trading every Thursday. Well, Wednesdays and Thursdays, and then closing most of those positions into before Tuesday, 10:30 a.m. Eastern time. And then there was a nice, great trade going in last week with Roku on that TGIT, where I clearly told everyone there is a nice big move coming. Everyone is the best trader in the world day based on the market internals. And then we talked about the setup in Roku. Believe it or not, there was people who were telling me there's a lot of great lottos, but we picked the one that made the biggest move. Okay, but is it by coincidence? I don't know. Let me just show you something here. You can follow these guys on Twitter, but honestly, I mean, that was the biggest move of the week in that Twitter trade. That was pretty crazy, especially if you took some weeklies. But where is this? Theta Warrior. This is guy. He's coming with Theta Warrior. I don't follow these people, but let's see what he says. Twitter Theta Warrior. Okay, so I'm not endorsing this person, but here. Saturday weekly set. This is how long ago? Oops. Last week. Somebody's gonna mute. Oh, you got a Pong? You got a question? Okay, let's just ask. Let's see what they. Okay, I'll open up for you. Just 1 second. I guess he deleted it. There was a. Oh, here it is. Lotto Friday. So he did hit quite a lot of the lottos, but and you could have taken all that risk, right? 2,100. Obviously, we don't know if he held the whole position into a 2,100% profit, but we just follow the trading plan, and you can take all of these and not know exactly what your position sizing is. But it just happened to be the largest position size you should have had among all of them. Just happened to be Roku, and that was the main winner. Okay, so how many lottos do you have to pick to make the right one, and how did it happen to be the TGIT for Roku? And then that's just the thing. That's just the way it works. And there's a setup we'll talk about later. You can follow this person. I don't recommend following anyone. I highly recommend just learning the setup and following the strategy. If you start following too many people, you're just going to mess up your head, right? But somebody posted this to me, and then this is what I said. Plus right here. So after somebody sent me this link that this guy Theta Warrior is bought Roku for those lottos. We don't know if he bought it, right? And we don't know how much he bought. But I just told the person who was with me that I said, I'm expecting a 9% move in Roku with a 61% probability. And that's all I knew. I didn't care about Chewy. I don't care about DKNG, LMND, Tesla, or Twilio. I only cared about Roku. That's all I needed to know, because that's the strategy. And you stick to the strategy, it's going to pay out for you. Even if you start losing on a couple of them, don't worry. It's just all about position sizing. And we don't know what his position sizing here is. Okay. You can I guess he could have put it like $100. This was 30 cents. So, okay, we can actually calculate how much he made here if he bought one contract each. So that's 30 cents. So let me just calculate with the calculator here. So 174 minus, so you got to subtract the initial, right? So let's just assume like $130 plus 20, so he put 25, that's $25, and then he makes $50, so he makes another $25 here. And then $25 goes to 95 minus 25, so $75 there. Plus the Roku goes from $180 to 3,900, so that'll be about 3,700. Plus the Tesla went from $1 to 212, so that's $100. And then plus the Twilio goes from $1.60 to $1.33, so basically maybe $1.20. So $4,000 if you put in approximately 30, 50, 200, 300, 400, 500. So $600 to make $4,000 on this trade. But the problem here is you don't know how many contracts here. And obviously all the one, if you just put in 3 contracts of Roku, which would have been sticking to the strategy, then that would be still $600 to make 4,000. So 3 times 4, assuming you manage the risk, max to letting them go all worthless. That was the big one. You would have made a lot more just trading on that one single one instead of figuring out what the hell this is all doing, right? So just follow the strategy. Okay. Futures green, good. And okay, so Pong's got a question. So I'm gonna unmute Pong here. So you can unmute yourself.
No, Roger, I was gonna say that I'm positive. That's it.
You're positive? Oh, okay. Yeah, thanks.
Yeah. Yep.
How many contracts? So let's have a dialogue here. So when did you join?
Me?
Yeah.
I think 2 months ago.
And have you been like following the Roku trade religiously, or you been?
No, actually, I just did start the onboard this month.
Oh, you started. Which day did you start?
I just did start on the Roku, the one that we lost.
The
previous one.
So let me take a look. So if I had to take a guess, you lost on the July 14th one. $500 calls.
Yeah, that one.
Yeah.
Yep.
And then what did you do? So that was about 1,400, and you probably lost most of it except for $200. And then did you get?
Actually, I did cut loss. I said stop loss like 30%.
Okay, that's pretty good. And
Yep.
and then now you should be then up you're probably up on those two Roku trades.
Yeah.
I would say 175%.
Yeah.
Is that right?
Yep. Yeah.
Okay, good job. All right, there you go. So that's Pong. I don't know who Pong is. He's not somebody who I talked to beforehand. Have I ever talked to you before?
I think so. Yeah, I think we talk about the Thailand.
Okay, well,
yeah.
Okay, well, that's great. Then we got more people coming to Thailand then.
Okay.
All right, thank you very much, Pong, for sharing.
All right. Yep.
Okay, well, see, there you go. He's basically started with a little bit of a drawdown, and he made some rules for himself. And I don't know exactly his net liquid, so I'm assuming I don't know actually what the net liquid is, but if he's following the onboarding, then the onboarding process is pretty straightforward. You just keep on following it until you double your account. And then when you double your account, so you started off with 3,000, now you're at 6,000. Then on days like this, last week, if there was a trade that had the potential for a gap fill and moving up like 12% on Roku, which we were stalking for the past month or two, right? Then you can negotiate with yourself to take a little bit more risk, like taking 1,500 to maybe even 2,000, right? Because you can afford it with all the profits you had. And but here with the onboarding, if you just started, it's hard to negotiate anything above 15% because you're still like, you can take a 15% hit and you'll still be up, even if Pong lost on July 14th contracts, the whole entire thing. He would still end up being up like 40 to 50% year to date. Okay, it just depends on how he wants to manage his account. Okay, we don't know if he put in more, if he put in less, but that's the idea here. Is like, once you get into a profit and you generate 100% profit, you close off half, and you have now pretty much everything for free. Step away, try to come back at the end of the day, see if it needs to hold on to Monday and Tuesday, but essentially, when you close off half of 100%, you got some freebies to entertain yourself with. Okay, so there you go. Like, just thank you, Pong, for sharing your experience, and it's great that you're positive. And I think a lot of people are positive, and we're going to try to keep on going and let this ledger keep on running higher. Okay, so this is the drawdown that we had from previous, and if you manage risk, all you essentially did was kind of flatten that drawdown. And now you should be up positive. And I do need to update this. Okay, so let's take a screenshot of this. And I also provided a little graph here, an image of what your position sizing should look like. Here, the recommended is all the way up to 10%, but for the TGIF, because we have back tested numbers, we recommend 15%. That's the max. Okay, and we're going to talk about compounding the profits later on, but right now the max, if you're onboarding, should not exceed 15%. So we got one win. We got our first win from Roku after going through a couple of losses here. Okay, so we're not super bullish yet, and Roku is now approaching 52-week highs. It made quite a big move in the past 2 days. So we need to be, we'll talk about that setup here. So I'm going to go back to the spreadsheet here. Where is it? The spreadsheet here. And then kind of delete this and update it. Okay, so you can see side-by-side comparison that this was the before, and we were actually, I think some people were trading lower because of the loss from last week, right? And you have to understand that people who join this server, right, with me to improve their trading, it's like, if I didn't run a server, then I would just trade the way that I think is right for me. But you also have to understand that there's people who are coming here and paying to learn, and I cannot enforce. Last time I enforced my aggressiveness, unfortunately, some people got taken out on the risk. Okay, because the net liquid, there was no onboarding. We didn't create an onboarding as clear and easy to follow than what we have right now. Onboarding, as you can see here in the Discord channel, it's very clear. Okay, you follow the onboarding. Like, you just listen to this carefully. You follow the onboarding with position sizing, you will make a lot of money. Okay, and then if you manage your risk, if you are the manager of your own account and you know what the rules are for your account, in conjunction with the TGIT strategy, okay, you're gonna make a lot of money. I'm pretty sure about it. You can make even more money if you let the positions go worthless after you close off some positions with profit. But keep in mind, the whole idea of this onboarding process is to double your account first. And then when we get some setups that look really great for these 10, 12% moves, use some of those profits, okay, to get into those trades. All right, so the performance from the last campaign on July 18th, we were kind of drawing down. I would expect, I don't know, depending on when you joined the room, definitely last week from July 14th to July 15th, we went to some early positions on TGIT, TGIF. And actually reviewing the early entries on TGIT, TGIF, it is still conclusive that we should have opened up TGITs 10 seconds into close on Friday. We could have got the contracts for a lot cheaper than what we purchased them for. I think we purchased them for about $2.50. We could have got them actually for a lot cheaper, for about $1.86 and lower. So even though it did move a little higher on Wednesday, we went up to about 305, 350. In hindsight, I was monitoring those contracts into Thursday. Thursday, at the end of the day, when the trend hit 2.5, the market was continuously choppy from Wednesday into Thursday, and Wednesday it took off. On Friday, it took off 12%. So early entry, I think it has to be a lot more, the setup has to be a lot more clear. We were under the impression that the market was going to move higher due to the trend profile, which was still correct. But the market is moving money around here and there, like into Roku, into mRNA, into Apple, into Amazon. It's just moving around. And yeah, as long as you get into the position, right, then there's not much you can do other than just wait it out till Tuesday or Monday. But fortunately, we got a pretty big move on Friday, and the setup was pretty clear, and I'm going to talk about that later today. But you should be, overall, I think 90% of the people in this room should be way above positive in their Roku trade. And if you manage it properly, you should be a lot higher. But keep in mind, I can't enforce the aggressiveness that I have in my own personality, in my own personal trade, because my personal aggressiveness is in the 750R. We mobilized $1.7 million of common shares in Roku. And I told everybody, I don't know if anybody remembered that. Let's take a look if it was there. TGIT Roku. Let's see. Roger. No, it doesn't say anything about that. No. No, I don't think I don't, it's not there. But we bought a lot of shares in Roku. Anyways, okay, so this is the chart from last week. So we were drawing down, and then so that's the chart from last week. And then we go to the ledger here. And I'll just copy paste this chart here. Into the ledger. So you can see side by side that, you know, it is kind of working here, right? We're just following the model. And then I'll just kind of put a frame around that to emphasize that that's the current. And maybe crop this a little bit so that I can, I'm not too focused on all this junk. Okay, so it kind of gives you like a perspective, like where we were from last week and where we are this week. So clearly there's a huge difference, and the ledger does not take into account the trades that we opened up for the discretionary trade. So when you take a look at the trades here, you can see that I opened up so read this here, discretionary A6 on July 22nd, which was Thursday. That's the three contracts, the 540 calls, and then we added more, and then we added another one on top of the TGI, the onboarding here. We managed a little bit of risk here, 360. Maybe that wasn't the greatest idea, but it is what it is, right? And then on Thursday, unfortunately, my mom was in the hospital because she's got some problems with her knees, and I was not able to open up the positions at the end of the day. Okay, so these things do happen. You can't expect me to always be there, but you got to be disciplined to follow the strategy. So that was a very, you know, family first. There's there's no way I can put any you know, blame on my mom's condition. She's getting old, but I have to take care of my parents first. Family's always first before money. And yeah, unfortunately, but I did communicate the trading plan, and as a result, I did open up. I knew that I had to leave, so I put on some early positions in the discretionary trades. Now, unfortunately, I didn't type in here the discretionary trade A6 with the TGIT. I forgot to put in the TGIT in this description. There's Magic Mike. There's all these things that are happening in Roku that I was identifying for that big move. I put everything I could in there to kind of get everyone on board. And then onboarders will add end of day 5 minutes before the closing. Unfortunately, I did not follow up with the alert because the circumstances that I was dealing with. So family is always first. I cannot, even though it was the move happened so fast, and you could have got into the position on Friday morning, but it is what it is. And you can see that if you don't get in early, 10 seconds into the close, and you're scrambling to open up positions at the opening because everything is moving up higher, then you might be left out of the trade, right? So might as well just get in there first and then deal with the drawdown if there are any, and then just and then just manage your profits, right? Because losing money, we've all lost money. If you had to write a resume right now to me, and I had to write a resume to you, I would write down my name, my address, my phone number, and then the only description in my resume is I lose money to make money. That would be my resume. I'd be like, summary of experience. I lose money to make money. Okay, that's exactly. So if you feel like you lose money and you make money, that is what you need to do with this 10 seconds into the close. You just got to deal with that, embrace it. All right, and then managing risk is a different topic. Anyways, on the next day preceding that day on Friday, I said that there was a kicker. So kicker is one of the most powerful strategies here, and I wrote it down for everybody. And yeah, you would technically hold the positions all throughout the day, and then you would only manage the positions that you want to manage, and then continue to push through the trade with that TGIT through Monday and Tuesday, and then we started closing all these positions off. There's a lot of profits started coming in. However, the trades for Roku usually moves like as much as 12% in just one day, and then after that, that's done. Like, I don't know if it can move up higher. This is way beyond my expectation on a Friday. It can move higher, but technically the position will close officially on Tuesday. And whether it moves up higher, I don't know, but I'll be looking for that yellow Darvas channel forming on Thursday into Wednesday into Thursday, looking for another TGIT in Roku, okay? So as you can see, I am plotting out every single trade here for the onboarders, but the profits, if you were with me on campaign number 1 and you have some profits, I did not use any of those profits and influence my position sizing in campaign number 2, as I do have a fiduciary obligation, a fiduciary duty for the people who are on board with me to make sure that they understand and getting the quality of information to become a better trader. If you want to force me to make bigger trades, then you will have to discuss that offline in a different messaging system, okay? Because this is right now is a for sure profitable strategy since April, when the market was literally crashing. We are still doing this trade over and over again, and I have tracked every single record to the date. Plus, on top of that, I have 750R accounts that have made more than $70,000 in Roku on that day. Cumulative profit on Roku to this year to date is probably over $250,000 in profit, gross profit in Roku. So the strategy works. It's just it's just the ability of the person managing the risk. Okay, everything here is following to the plan. Everything is being tracked. Going back just to for the part of the focus session is just the TGIT, TGIF management, your trading plan, the golden rule for maximum profits, as that's described here with Maximus from the movie Gladiator. You want to make sure that when you have a trade management plan, you have to kind of stick to it. Otherwise, the maximum profit cannot be realized. So the trade management, open at least 3 contracts, or theoretically 2 contracts, in relation to your net liquid. So 3 contracts is a very, very ambiguous, is ambiguous, because 3 contracts could be 3 contracts of Google, 3 contracts of Amazon, 3 contracts in AMD. It could range from $300 to $9,000, right? So you still need to know how to position size using Kelly. So that's why it's a theoretical number of contracts would depend on the number of purchase based on the trade number and actually net liquid. Important, okay? I cannot, the net liquid is very, very important. The number 1 rule, if anyone decides to make their own trading room and decides they want to be a trading guru, you must teach the position sizing as a fiduciary duty to your clients. Okay, otherwise you're just going to blow up a lot of people's accounts and then just deal with the risk. You need to know how to manage your risk. You need to have a track record, and a track record that is that works into perpetuity. If you do not have a track record and you decide to open up a trading room because you feel like you got something that works, that is not enough to make sure to put you into the group of in a category where you can outperform the market. You must have an understanding of the risk management principles, and that one is Kelly criterion. Martingale with buying the F and dip, that is technically a pretty aggressive strategy, but I don't recommend it. Anyways, then step 2 is to close half your position such that the excess amount of contracts that you have are pretty much free. So then you are pretty much at break even, and whatever profits you generate from those last contracts is the maximum profits. Okay, so maximum profits is actually not defined by the number of contracts you hold all the way into the end of the day. Actually, if I had to reiterate here and make a new slide here, maximum profits is defined by the number of excess contracts held after closing a position a managed position greater than that has generated profits greater than 100%. So maximum profit is defined by the number of excess contracts that are held after closing a managed position a portion after closing a position, the positions which has generated profits greater than 100%. So in short, so for example, buy 2 contracts, close 1 contract for 100% profit, assume 1 contract equal to 0, max profits, so max profits is a function of closing 1 contract for 100% and assume 1 contract goes to 0. So that's I don't know if anybody really understands that, but okay. So the golden rule here is that, and then if you scale, so this is theoretical, right? Or like the minimum. And then when you scale, right, because everybody loves to scale, let's just assume 100. Scaled example. Okay, then you just take this and then this, okay? I don't know if you understand that, but there you go, okay? I've taken 2 extremes. Anybody have any questions? I know it's hard, but this is what you got to do. Now, there are optimization methods of determining whether it's 50 contracts or 80 contracts. That will depend on the trend. The trend hit almost 3 point something on last week, which would have meant that the market was choppy. But Roku just went on a parabolic move, and how would you know when you have a trend that's hitting 3? So you don't know. So you gotta figure out what you want to manage. You could have managed on Roku. I think the best that anyone would have gotten was closing off 80% of the contract at 100% and leaving the rest ride. Is anyone still holding contracts in Roku? If you do, please raise your hands. Nobody? Wow. I know the algorithms are still holding a lot, Roku's common shares. Okay, so we're kind of updated here. So now we're going to the trading plan. So the trading plan for July 25th, July 26th into 28th. Actually 27th, right? Because Wednesday, yeah, still trading on Wednesday. All right, so we'll take a look at the futures. Futures are trading green. Right there. So I will write down futures are trading flat and slightly higher okay, and nearing 52-week highs. Trend on last week, last Friday, trend was, how high was the trend? Can't see the trend. Let me see the trend. The trend was last week. It hit 4.18 right here. Okay, so trend. Last Friday was greater than 4, or yeah, greater than 4. I mean, 4 and 4.18. What is it? I mean, what are we trying to do right here, right? Oh, Roger, you're wrong. It was exactly 4.18. Okay, whatever, man. Whatever, buddy. Okay, 4 is pretty damn high. And then, so that's bullish. That implies market is bullish into Monday, not and or Tuesday. Okay, it's very important between when you know these conditionals here, right? And an or, huge difference in terms of logic, right? If you have Monday and Tuesday, then it's either one or the other. It can be both, but it could be one or the other, and it's still true. If the market dumps on Monday, look to turn around Tuesday. This one, I'm not sure. So this is not, that would depend on the VIX, depending on the VIX. And then 10 seconds into the close. So that's another thing. If you just follow 10 seconds, I know we try to open up positions during the day to try to catch the low. Okay, and that's fine. I think it's still kind of a little tough. If there's news that comes out intraday, like Boeing usually does, then you'll probably catch a move that rips up in the mid-afternoon. But in general, I think based on the research that I've seen and research that I've done in my own account, to become a best trader in the world day, almost 10 seconds into the close has worked more often than you would expect. Okay, 10 seconds into close is probably one of the best entry strategies known to the market. Let's take a look at the current positions in the what's the next one here? Predictive calendar. Predictive calendar. Let's look at the predictive calendar together. So we got 55 to 69% going to the 26th and 27th. So let's copy that there. And let's just duplicate this slide and then just take out this here. It's not the clearest, right? But 55% on 26 and 69% on the 27th. And then, so we can get rid of this. Oops. Later on, I'm going to make this trading focus plan PPT more aesthetically pleasing. Okay, you can see how like you know how rough it is in terms of the eyes on your eyes, but that's because I haven't put a lot of effort into making this beautiful. Please forgive me. All right, so then in terms of the positions onboarding, we don't have any positions, so 0. And then we have discretionary trades, premium. So we have Fedex, diagonal strangle, and that's in the August. I gotta look at my count. And then the Netflix. Just load up my account here. Does anybody have Fedex with me? That one is a pretty interesting setup that we'll discuss about. That's a purple D with an A6. And we have it strangled with a directional bias on the long side. Let me just open up my positions. How come this is not loading? Okay, hold on. Okay, here we go. Shoot, it's not working. All right, so I got the Fedex, August. Well, I just type in 080621. That's the 277.5 puts, 1 contract. And then I have the 0820, 320 calls. Does Does anybody have these ones? This is the one exactly what I got. Anybody have this? Raise your hand. I don't know. Pong, do you have it? You got to raise down your hand and up your hand or something. No one? Just me? Okay. I guess it wasn't worth the risk, right? And then Netflix, we have 1.5%. So for me, I have 10 contracts. That is the 073021 530 calls. Sorry, don't have it. I have 8 contracts. Does anybody have Netflix A6? Raise your hand. No? Yes, no? Tap to keep Tapesh. Yeah, a couple people. Okay. It's only a couple people. All right. Okay. Sue has it. Great. Yeah. All right. Well, so this is the difference between onboarding and premium. So generally the Fedex is a very anti-fragile trade. There's no emotion involved. We just let it run, and it should generate a profit based on how it moves out of that purple D with the A6, and that's going to generate about like 100 to 200% return. But then we need to manage one of those contracts, whether it's the put or the calls. We don't know yet until maybe like by Thursday or Wednesday. So that's what I'll write down here in the trading plan. So on the trading plan, we have a diagonal strangle with a bullish bias in Fedex. So the capital, okay, I'm not going to change this. So then basically we will, since this position is an anti-fragile position, then all we need to do is wait for the breakout or breakdown, and then figure out which contracts to close, which contracts the loser to close to mitigate the drawdown. Most likely, I plan on holding these. So Fedex has a purple D with an A6. So we take a look at the trading view. If you've joined, the service with us, right, you should have the toss option algorithm. And keep in mind, as long as you're a member into the end of this year, you will get the Wolf Wave for free. I'm going to be charging the Wolf Wave to people who are not members for an additional cost. Everybody who is a member will get the Wolf Wave indicator for free. We'll add it into your account. Okay. So that is the most powerful indicator I've ever seen in my life. Fedex. So if you look at Fedex here, you can see the purple D, right? The algorithm here it's been chopping between neutral and selling short, but it's still trading above the 6-day moving average. If we turn off the toss option algorithm and just look at the naked form of the chart, okay, you can see that this candle formation right here is a candle over candle. Doji with a jump over the previous of that candle with an A6 on both of the TTM squeezes. The squeeze pro here is just the default setting of length 20. Squeeze mom LB, I have no idea what that means, but I've changed the length setting from 20 to 14. So we have that 6 length window where we're filtering, okay? Because sometimes you get to miss a little bit, like the Roku trade. So if you take a look at Roku, on the 78-minute time frame, you can see that the squeeze actually came in here, but it didn't come in here. Okay, 1 dot squeeze is very powerful. So that right there is a picture perfect almost one of the best trades. I mean, come on, it's too good. All right, so then we're going to FedEx, and FedEx got a purple D on the 70-minute time frame. It does have another purple D with a 70-minute T2 squeeze. So maybe we do get some resolution to the on that move, some direction on that move tomorrow. But the purple D here, the general idea is you want to hold this position for as long as you can for at least 2 cycles. Right now it's still scanning, and cycles means that the next dot should be green, and then you should be able to control the risk. We only have 1 contract, so once we figure out the magnitude of the move on cycle 1 and 2, we would need to hold the positions all the way up until at least cycle 2 to determine the amount of profit we have with respect to the puts. And then there is an A7 here for FedEx, which means that the profit potential could exceed 325. So we have the 320, and if it moves on that A6 and we got plenty of time, these contracts could be essentially worth almost $7 to $10. So the potential on the 320 calls can move the premiums from, how much you pick them up for? I'll just say $10 to $10. And then the puts, if the direction is south, then the puts all right, so number 2 is Netflix. So Netflix, A6 scanning. Oh shit. Taking a look at Netflix on the chart here. Netflix A7 does not look so good, but in terms of a weekly Fibonacci retracement, fib, so many fibs, from here to here, it looks like it's pulled back to around 61.8. Okay, so this could be essentially a wave 135 setup, meaning that, where is this arrow thing? $135 means that you move here to here to here to here. That's a 135 setup. So that's wave 1 on the weekly. Wave 2 is the pullback on earnings. Wave 3 is essentially where we are right now. Potentially, we don't know. When we look at the A6 here, we do have a candle over candle, just like FedEx. The candle jumped over the candle. It dipped quite a lot on earnings here and then held for some reason. So we don't know why it held. Maybe it should have crashed. But it does have an A6. Okay, so there is a potential move for Netflix to kind of actually break out of this 560 top to make a new 52 kind, make a run up to 600, which would be the next psychological target. That, we don't know if that will happen tomorrow. I wouldn't be surprised to see a 5 to 7 to 10% move in Netflix as well. We don't know. And that actually looks exactly very similar to a Roku trade setup. So here, Roku, see the A6 right here? And here, and then it was moving lower, and then it popped up, right? That's exactly what Netflix looks like. Okay, but Netflix and Roku, they're totally 2 different beasts. Roku is like a penny stock. No, not penny stock. It's like a dollar store. So it moves a lot because there's a lot of marketing being targeting the middle class. So middle class, even if I consider myself a middle class, I don't know what kind of class I am. I'm just probably just in the norm. We are always being bombarded with marketing, right? And Roku, I don't use Roku, but a lot of the targeted customers that the marketing world is has figured out seems to be drawn toward the Roku marketing the model. So it's crazy like how Roku has set up their business. It's everything is can be purchased at $1. There's advertising. There's an ecosystem. It's a very interesting model where everything can be purchased. But Netflix doesn't follow that same model. It's mainly more for those thespians that are into making movies and episodes and whatever. But there's little marketing in Netflix compared to Roku. So Netflix does have a move to make a new 52-week high. That would be $600. And if it were to make a move, it would be making that move on that A6. All right, so that's scanning and triggered TGIF last week. So let's take a look at the server together. So we go to the server and everybody should have access to main server 102. You can see that there's Netflix triggered TGIF, right? And you can see the momentum in Netflix has a very, very interesting looking Darvish channel and a purple D. Complicated pattern, not ideal whatsoever. So it is discretionary. I did not type in ideal before in front of Netflix here. But if I were to post this image here, you can see that the algorithm is showing a potential short squeeze because the algorithm right there on the left-hand side, which is all about momentum, is still selling short, but going in the opposite direction. So that's not good if you're in puts, right? And in the onboarding, we always stress that, especially if you're American, please, if you're American, please try to not buy puts unless it's really extended, okay? I know, and I know the rest of the world knows that America is one of the best countries and the strongest countries and the most powerful country in the world. And obviously, the weird thing is they control the currency. The reserve currency is the greenback. So, whichever country controls the currency controls pretty much the world. I don't recommend shorting the American markets very often, but if you do short, make sure you have a good reason to, like when it's extended or there's some bad news. But even bad news can be good news, right? It can be done on purpose. But here in this case, Netflix on the momentum side is in a sell short position and it's moving in the opposite direction. So if the market continues to move higher, then and then rates drop, and the funny thing is we got the Fed actually coming up on Wednesday, so Netflix actually moves quite a lot when the Fed is speaking. Does anybody remember that here? Does anybody remember that I talked about how the Fed usually kind of makes Netflix move a little bit, like a lot? If you remember that, maybe raise your hand. Anybody? Is it just me? Hello? Okay, nobody really cares. So then Netflix is in a social position moving in the opposite direction. And you got a Darvish channel here, the yellow D showing a move up to 535, okay, with a TGIF. Let's take a look at the TGIF a little bit more carefully on the server and see what kind of probabilities we're working with here on the performance report. Seasonality plays a huge role. And Netflix, it's not looking too good on Netflix. Look how small that histogram is. It looks like Netflix does pretty well from January, February, and March, but July looks like not so good. Maybe that's because of the summer doldrums. Not many people are watching. Okay, so that's not encouraging to see. So, I mean, we'll see what we get out of Netflix. We'll take a look at it in a little bit more detail. But in terms of momentum, it's showing like a lot of momentum here. It's actually made the most in July. So that's a bit interesting, okay? And then in terms of momentum, it does okay in August, but the top 2 months of the year is July and January. So we'll see what happens. This is pretty interesting. So that means if the algorithm on the momentum one on the left-hand side ends up flipping from a neutral to long position, then based on the the seasonal strength of momentum, okay, especially with the Fed coming up, we have a pretty good chance of making a pretty good profit on the Netflix trade here. Okay, so that's pretty good to see. And then if we go on to the, take a look at the actual chart again. And type in, my God, I have this trading view is getting like complicated because they're just charts, Netflix. Oh yeah, see that? Do you see the another ideal? Oh, look at that. So it's not the most ideal trade setup because it's missing the TTM squeeze there, but it looks, it's getting there. And then let's look at the 70-minute time frame together. Oh, a nice purple D. So we are in a very, very good setup. I wouldn't say it's the most ideal, but it's pretty damn close. And you can see a couple of gaps here, right there, 534, and another one here at 564. So there's a good chance that Netflix goes up to 564. So the basic plan here is if you have 8 contracts for Netflix, then what you want to do is if Netflix, so Netflix target potential is 564 by end of week. Okay. So if Netflix profits more than 100% between Monday or Tuesday, close either half or 80% of the position and keep hold onto the excess to realize, depending on your French or your whatever. Let's just keep it neutral, right? Max profit. And that's max profit is here. Slide number 6. Okay, is that pretty straight? Is that pretty clear? Does anybody have any questions? Okay, so I guess that's pretty much let's take a look at if anybody has any typed in anything in the main chat room. Oh, Barino, you have Roku contracts? How many do you have left? That's pretty interesting. Oh, maybe she's talking about, maybe he or she's talking about FedEx. I have the FedEx Strangle too. Okay, good. Oh, there's FedEx. Okay, good. And FedEx also shows Wolfwave daily. Oh, does it? Let me double check that. You're probably right because you have the Wolfwave. Yeah. So we got a target of what, 310, maybe 310, 312 on that A6 with a cycle into cycle 2 and 3. So then that would take our contracts on the FedEx. I don't know, the option chain here is not opening up for me, but I would assume maybe $6 to $7 on those 320 calls. That would make sense. Calls or puts for tomorrow on Tesla? Oh, I don't know. That's a very good question. But, oh yeah, we're going to talk about Tesla. My God, what's going on here? That's the Zoom. So Tesla has an A6. That's a pretty big deal. And, you know, on all honesty, this quant data is driving me nuts. I don't know exactly what they're doing. It's just making it very clear that there's someone in there that's just not doing their job properly. Their assumptions are wrong. I'd rather just let them just, you know, do like a max min filter where they just, you know that what the average purchase of calls and puts are, and then just put a threshold level where it triggers all the unusual activity, rather than just having them, we have to rely on their assumptions to make and figure out which ones they can pick, right? Because they're obviously, they obviously posted like the move on Roku started to happen into Thursday, and I don't think there was any unusual calls being posted on Roku until Friday or something. I don't know. It's just I'm getting kind of like frustrated with this quant data, but they have to change up. They have to know that they have to change up the model. There's something wrong. And I've been approached by them direct message. They said that they would want some advice. I said, I don't know. I don't have time for that stuff. I gotta make my money. I gotta make money on my own end to keep things running here. But it's just a complete mess. Good way to know if a flow system is working is if you take a look at the biggest move from yesterday, Friday, which was Roku. See how many alerts were given prior to that move, and then you'll know which service is doing a good job in finding these setups or monitoring the flow. But I think the flow from quant data is just getting worse and worse, and I think they're scrambling there, or someone got fired and maybe they're hiring somebody in the future. I have no idea. But yeah, Tesla, in terms of Tesla on the chart here, Tesla has earnings. Okay, it's got a very, very complicated pattern here, which is almost like a rounding bottom. And I do think that the flow in quant data that's showing a bunch of puts being purchased for the dump into earnings, it could be right. And that will be an eye opener, okay, to knowing how well they like what if their models are right. But in terms of option trades, right, we cannot afford to buy, like, most people are not that patient enough to hold a bunch of puts into earnings. That's just crazy, right? I think more than like 10, $20 million, maybe $5 million worth of, maybe $2 million, $3 million worth of puts have been going through that quant data channel that we purchased. And it's just been giving the wrong impression to all the option traders, because we're not trading into earnings. We're trading around it. And that data that they're providing is giving us data that's almost almost looking like it's modeling the post performance of the earnings. What if earnings they beat on earnings and Tesla gaps up 10%, right? What happens to all those puts? We don't know, and all that unnecessary assumption is just pure theta decay. So I know there's a gap in Tesla all the way down to 400. We've been modeling these puts here. That's that big orange line. And the way that Tesla's trading is kind of like rounding top, and it could gap down, and that can happen. But we're not in the position to make those types of assumptions, especially option traders. We cannot, we want to just focus on a strategy, and we don't have a strategy around Tesla earnings. And we will wait until after Tesla releases earnings to make a decision on how we're going to approach this TGIF. And buying one put at $400 is into earnings is something that could be a great, like, if you have some profit, if you have some profit, buying some puts on Tesla for the earnings to gap down to $400 is not a bad amount of risk to take for such a dirty little chart. But making position sizing with 15% into the earnings is not a strategy because it's 50%. Even though you assume Tesla is the greatest company in the world, and you assume that Tesla is going to run up to $1,000 with a 100% degree of confidence because you believe in that company. Unfortunately, the binary event and the nature of earnings is 50%. So you take your 100% conviction, multiply it by 50%, you literally got 50%. And if you know anything about Kelly criterion, which I've been teaching for the past like 3 to 4 years, Kelly criterion is a function of probability of success. So if you got a probability of success of 50% going into Tesla earnings, and the profit factor is just like what, 5-10%, with considering all the decay that comes into with the theta crash, your profit potential is going to be less than 100% in that area, 60% of the time. So it doesn't make sense to put in such large risk into a binary event unless unless you have inside information or you have some profits to burn. But in all honesty, I think quant data is not doing the greatest job. I don't think anyone really can predict the earnings move unless you actually work for the company. We will look into Tesla TGIF post earnings, but right now we are focused on Roku, and our next onboarding trade in Roku will be on Thursday. We're looking for Roku to break out to $600. Roku, basically the way that it moved, we're looking for Roku to do a launch pad. So I wouldn't be surprised to see a little bit of a pullback into Tuesday, and then Thursday pop up to make another move up to 600 into earnings. It is an earnings run potential. It did a massive breakout with an A6. I would be very, very surprised, but not surprised to the point where I'm peeing my pants to see a double B on Roku on Monday. That means another 12% move in Roku is potentially there. And that could happen because we saw that happen in mRNA, right? It can happen anytime. So we don't know. Let's talk about the positions that the retirement account are in. Retirement account is long Shopify, long Roku, long Google, long Amazon, long Apple, long Netflix. So let's type that into the PowerPoint presentation. Evaluate the decision matrix. So long, shop, Roku, Google, Apple, and Amazon, and Netflix. And that's it. Okay, and yeah, so basically, if for all those who have joined me for the onboarding and you're a member, thank you very much for joining and trusting the team here. We have a lot of top traders that I've handpicked for everybody. I believe that they have great trading talent. And once you generate some profits, then you need to figure out how much of those profits you want to taking their trades. Please be very careful. You do not know their net liquid, and you should filter their trades using the ideal trade setup. But they are doing a great job, but make sure you understand that if it's not a strategy, then it's simply a setup. And the setup cannot be, in theory, greater than the position sizing in the setup cannot be greater than your position sizing in a strategy. Okay, strategy always supersedes the setup in my personal opinion. But if you think that the setup is better than the strategy, then you've got to make sure that you have a lot of things in that setup that is going to provide you enough conviction to increase the position size from a setup to a strategy sized position. This is so important to understand. And then the next upcoming development we have here is we have the Wolf Wave indicator We have it for Thinkorswim, but I've customized it and modified it in the trading view to provide a better result and performance. Everybody who's in a member gets it for free. And then on Monday, we have day 3 on risk management. That's part of the onboarding. So some people may not know how to manage a risk or actually define their position sizing as per strategy or as per setup. That's tomorrow at around 5 to 6 o'clock p.m. I'll post it in the Zoom link, post it in the main channel with a Zoom link. Okay, so feel free to join. All sessions are recorded. Before we end off today's session, does anybody have any questions about the plan or what to do or what you're in? I know there's probably a lot of people with a whole bunch of other contracts holding into over the weekend, but feel free to raise your hand and open up a dialogue. But if you're fine with today's focus session, then we are done for today. Futures NASDAQ up 0.15. Looking pretty good. Can you look at QDEL? Okay. So QDEL on the 70-minute does not have a squeeze. It has a sign of an ideal trade setup on the 78-minute time frame. A6. Nothing there. Kind of looks like a Netflix type of potential trade. A7, scanning on A7 has earnings coming up. Target potential for QDEL would be $200 to $300 on the A7. Monthly, nothing there. 30-minute time frame. It's got a purple D 30-minute ideals. So it does have this short squeeze setup here on the 30-minute time frame. So if you're holding on to QDEL, then basically you can count your cycles out of that on a day trade, look for 100% return, close half, let the rest ride. So this thing will, probably, depending on how the market moves in the pre-market at 4 a.m., QDEL will probably move up and open up above 151. And then you got a couple of cycles to hold for 100% profit and then close it off at 100%, half, and then let the rest run and see if it can actually run up to, that, I don't know. It's so extended. I don't know. It's pushing up against, there's a lot of gaps here at the 200. So, wow, that's a pretty interesting setup there. So yeah, I think if you give it enough time, maybe this thing can run up to 200 because there's a gap right here at 211. Interesting. So I'll just type that in there. Set target QDEL 211 gap fill target with A7 potential. When that's going to happen, I don't know. Probably before December. Next ticker is Regen. Is that Regen or Regen? Regen or Regen? Regen. Okay, so in terms of the biotech stuff, on Regen on the A6, there is something scanning. It does look like it's going to bust out and run into earnings. I'm sure there's a gap fill somewhere around here. Yeah, there's a gap fill at 623. Gap fill target potential before earnings. Before which one? Before August 6th. All right, so next coach, what is a purple D? Oh, okay, purple D is, you see this, do you see my chart on Regen right here? Fahad, do you see it? So purple D's right there, and you can see the move pushed it higher, right? With the squeeze. And if the purple D is generally bearish, see this purple D bearish like that. But if the purple D, if the price inside that purple D channel is pushing to the upper part of the band, the upper part, then you're most likely to see a short squeeze because of the way that it's just the way that the purple D was formulated in such that it's making a lower high. And if it does break out of that purple D, then you're going to get a short squeeze where a bunch of buy programs are going to push the price higher. And that's what you can see there. And right, Regen, you can see that in a lot of setups. Even I think it showed one on Tesla right there. Purple Ds. They create massive squeezes to the upside. And the yellow Ds here in Tesla are just getting worse. So I think quant data could be right in terms of its move to 400, but for option traders, we don't have like the luxury of making these huge assumptions going into earnings. And even though that quant data is showing like lots of Tesla's got lots of puts being bought every day. Like Tesla, if you look at the option chain, there's like literally millions and millions of dollars being bought on the puts and calls. So why is it always like, why is quant data always posting the put side of those, the option market activity? It's just crazy. I mean, what the hell is going on there, right? And then I think it's because they're making an assumption, but that assumption is not in line with like a lot of traders who are swinging within like for a 2 or 3 day period, right? So if they're going to make an assumption, they have to be clear what that assumption is, because if they just leave the assumption up to us to figure out, that's not responsible at all. That's actually borderline illegal. That's like messed up, man. You can't, if you make an assumption, state the assumption and don't leave it up to the people who are using real money and paying like, $2,000 for their service to figure it out for themselves. State the assumption. Why are you always posting Tesla puts instead of all the other calls and puts that are being purchased? Why are you picking those ones? And why, right? Clearly say that you have a threshold and you're filtering it out or whatever, but it's just ridiculous. I'm just like, whatever they're doing is just, I'm just like, not that somebody there has to get fired. I mean, that if I was running a business, I would straight up like tell them to like, pack your bags and leave, because you made the wrong assumption. It's not in line with what an option trader is expecting. Option traders trade on a weekly basis, right? We trade on a weekly time. We trade weeklies. That's why we have contracts that expire every week, right? They're not monthlies. So why are you posting things where you're making an assumption that we're trading on a monthly to 2 month time frame? We're trading every week, on average, between swinging like 2 to 3 days. So it's a reckless assumption that they forced us to figure out. I've already figured it out after 2 weeks, and it's obviously that they're not doing their job properly. And you can tell they're responding to Cheddar. They're responding to even me. Like, I'm such a small little fish in the pond. Like, why are they even responding to me asking for help? Like, do you even know what you're doing? All right. Okay, so that's pretty URI. Let's take a look at URI. Oh, that's a nice one, man. That's a nice purple D, right? Purple D with a gap at 314, but that's an A6. So let's look at the weekly. The weekly's bacon is a little bit too juicy, but if it goes, it's got earnings. Look at that daily squeeze, man. That might pop. That looks like a double BBLT, 70-minute time frame. It's got something there coming up on the 14 on the TTM squeeze there. 30-minute looks like it's good to go. And I think there's a couple of targets here with some gap fill potential up to 346. When are the earnings? July 29th. So that's 3 days. A 3 days earnings run. Those contracts, I don't have access to the option chain for right now because it's still loading on my end on Thinkorswim. But it could run up and fill that gap here at right here. There's a gap at 318. Oh no, not that one. 330. $339. So I wrote down here that there's a potential target in URI for earnings run for a 3-day hold before earnings. You can hold into earnings, but make sure you're using profits, not your principal. There's a gap fill here at 339. Purple D on the daily, A6 on the daily. It has a short squeeze potential with a run into earnings. That is another ideal trade setup courtesy of Andrew A. Thank you for showing that. That looks really good. Next, wolf wave. What's the wolf wave target on URA? URI. Let me double check here for you. URI. Yeah, they've got. It looks like it's capped here at 334. So it's pretty close to my target 339, maybe an overshoot. So yeah, that could work. It looks like the wolf wave projection target is close to the gap target at 339. So you get into a position on URI, you buy, let's say 2 contracts, it goes up 100%, close off one, hold the rest into 339 target and see what happens, right? And then if it doesn't reach up to 339 before earnings, you got to close it out because, or if you don't have to close it out, you can just let it go because it'll be break even if it goes to 0. But there is a potential here for a big move on that A6. That is a potential trade on URI. And if it gaps up on earnings, then I guess the move here would be up to 375 target. 375 is a potential earnings beat for URI, but that depends on how you manage your risk. So if you buy 2 contracts, in theory, that's the minimum amount. And then you make a double on that, close off one. So you got 1 contract going, and that's pretty much for free. See if it reaches 339, which is the gap fill target. And then it's up to you to decide to close that position or to hold that position into an earnings beat potential for 375. Boeing, please, if I should continue to hold. Okay. Boeing. Boeing on the daily has that gap, which is kind of nasty. It's got a lot of gaps, pretty hard to trade. 70-minute time frame. When do they expire? Those Boeing contracts? On the 23rd? That means the 30th. And how many contracts do you have left? Are they managed or are they 2? Are you up? Are you making money on them, or what's the condition of them? What's the condition of the position? Captain, what's the ship is it's up 240. So are those managed positions? Okay. Yeah, I would just see like what happens on Monday on the TGF cycle. And then if it makes a little bit more money, close off one of those contracts and let the rest ride. See what happens into earnings. I'm not expecting anything positive out of earnings, but yeah, that's the same idea, right? I mean, you gotta think in terms of risk. Like a lot of the companies right now are going into earnings. So how can anyone make a strong assumption of a binary event? Like it's all 50-50 flipping a coin. So if you're flipping a coin into something that's like, I mean, Boeing's got one of the worst charts in the world. It could surprise, but there's, obviously if we take the extreme assumption that it's going to beat, you're still not going to go all in on earnings, right? It's 50-50. You have to go, if you do go like pretty heavy on earnings, make sure it's all based on profit. But even with somebody with a sense of risk management, you wouldn't put all your profits in a binary event. So I highly recommend just, not to focus, not to spend too much energy on the Boeing trade. Try to just figure out how to close off one of those contracts, and then just move on and focus on the next potential trade setup. Maybe TGIT, or maybe looking for another ideal trade setup on a 70-minute time frame, or maybe getting back into Roku for a double B. Maybe Roku moves up 12% tomorrow. I don't know, but these binary events is pretty tough. And there's always that entertaining idea of catching a big 18-20% earnings beat. But honestly, if you're going to get into that type of business, you got to make sure you have enough profits to burn. It's kind of like just the way that the whole option market is designed with trade management principles. Like you'd rebalance your portfolio so that your risk is not being exposed too much, and then you want to compound those profits systematically, where you put maybe not all your profits in one basket. You diversify it among a whole bunch of like maybe small caps to large caps, or whatever the designer is recommending, right? The designer is ultimately going to be forecasting how much wealth is being generated in one person's account. You all realize that the money is being printed to like craziness. So the wealth gap in North America is going to get worse. You're going to see a lot more poverty. You're going to see a lot more people with buying mega mansions. The wealth gap is getting worse and worse and worse, and it's going to probably get to a point where it's just going to get pretty bad. So you need to definitely protect yourself and make sure you're making, being consistent with your trades and outperforming the market year to year. All right, let's take a look at another thing here. SE seems to be coming up to make an all-time high. Can you please check out SE? So I don't know anything about SE, but SE on the daily, yeah, it's got an A6 double BLT short squeeze. Yeah, so it's got that purple D. And on the 70-minute time frame, there's nothing on the 70-minute time frame, so I wouldn't really be getting into C limited other than the A6 30-minute time frame. Yeah, it's kind of like a 52-week high, maybe a breakout to 310. And then A7, it's got a huge A7 engulfing 1, 2, 3, 4, 5 candles. So basically, if we assume that this C limited is a BLT setup, then I would expect absolutely nothing to happen in C limited for the whole entire week. I think it closes exactly around $300 this week, and then it moves higher into the next week, which is the first week of August. BLT. You have to assume that's a BLT, right? Because we don't know if it's going to move higher or lower, but all we know is the candle combination for C limited looks like a potential BLT setup. So you would want to look for a flat close for the week on Friday, trading between 305 to 294. That will set up for a BLT into next week for a move up to 340. Okay, thank you very much, everybody, for your time. The focus session is over. I will see everybody tomorrow morning. And yeah, August 3rd and August 6th, I will not be on voice. I have a conference to attend to. Thank you very much. Have a great day.